If you are someone who is a first-time investor in the stock market and do not know where to start or what is the right thing to do, then in this video I will cover 5 very important concepts that will help you create wealth over the long term and save you from losing money in the stock market. My name is Kanak and welcome back to my channel. If you find this video helpful, then please show your support by liking and subscribing to the channel. The first and most important principle that will tell you the reason why investing works is power of compounding. And as per Albert Einstein, compound interest is the 8th wonder of the world. So let us understand how compounding works. Over the last 50 years, the average returns in the US stock market has been about 10%. And at 10% compound interest rate, your money doubles every 7 years. So the money you invested at the age of 30 will double every 7 years and become 32 by the time you retire at the age of 65. So if you invest $1,000 by the age of 30, it will become $32,000 at your retirement. If you invest $10,000, it will become $320,000. But if you invest $100,000, it will become $3.2 million. So compounding works in favor of the person who starts early in the stock market, and the longer you stay invested in the stock market, the more money multiplies. The second important principle that will protect you from losing your hard-earned money is the importance of diversification. There is a famous saying, do not put all your eggs in one basket, which translates to do not put all your money in just a handful of stocks. Picking the right stocks and making a profit over long term requires a lot of time and technical expertise. So unless you are a professional fund manager, it is advisable to not put all your hard-earned money in a handful of stocks, but rather diversify your investments across stocks from different industries, company sizes, geography, and so on. And the best way to diversify is to buy an exchange-traded fund or ETFs. You can buy ETFs just like stocks in your brokerage account. And ETFs provide diversification because ETFs invest in a basket of investments such as stocks, bonds, commodities, and so on. So by buying just one single ETF, you automatically invest in a variety of investments. ETF investing is a simple, safe, and easy approach to build a diversified portfolio and invest in various sectors and markets. The third critical principle that will save you from paying high fees to the fund managers just to get poorer than market returns is index investing. As a beginner investor, you might believe that the professional fund managers who have big research teams and who get paid millions of dollars are generating more returns than the stock market average. But you will be surprised to know that multiple studies have consistently shown that more than 80% of mutual fund managers do poorly than the S&P 500 index. S&P 500 index is a basket of top 500 companies listed on the US stock exchange. It is a market cap weighted index, which means representation of companies in the index is proportional to their size. So the likelihood of you making more money over the long term by investing in the S&P 500 index is higher than by investing in a mutual fund managed by a fund manager. VOO and SPY are some of the most popular exchange traded funds that replicate the S&P 500 index. And these ETFs are low cost and the current expense ratio is 0.03%, which means for every $100 that you invest in these ETFs, you will be paying only 3 cents in annual fees. Investing in these index ETFs is called index investing. The fourth useful principle that will help you decide on when to invest in the stock market is dollar cost averaging. Most people waste a massive amount of time trying to predict when a particular stock or the market will crash or when it will rise. But unfortunately, most or almost all of these people fail to predict the market accurately. Legendary investor Warren Buffett says, trying to time the market is both impossible and stupid. There are thousands and millions of moving parts to the stock market, and no individual has control over these millions of moving parts. So instead of wasting hours of your productive time on trying to predict the stock market, the most effective investment strategy is to dollar cost average. Dollar cost averaging is nothing but investing equal amounts of money at regular frequency and averaging out your purchasing price. By dollar cost averaging, you avoid the risk of investing at an overvalued price if currently the market is overpriced. And it also provides you the benefit of purchasing more units of stocks when the prices in the market are low. The reason why dollar cost averaging works is because on an average and over a long period of time, the stock market will be higher than where it is today. So if you purchase at an average price today, the average price 5 or 10 years down the road will be higher than what it is today, which will eventually lead to you making a profit. The fifth important thing that you should know about is taxation. So the profit that you make by selling your stocks or other investments will be considered taxable income, and the taxes you pay will primarily depend on 2 key factors. The first factor is how long have you held your investments, whether long-term or short-term. Second factor is what income bracket you fall in. Now, short-term capital gains tax applies when you sell your investments within a period of 1 year, and the tax rate that applies is the same as your income tax. So, if you fall in the 30% income tax bracket, then the profit from your short-term sales will also be taxed at 30%. On the other hand, long-term capital gains tax vary from 0% to 20% depending on what income bracket you fall in. As you can see, the highest tax rate on long-term capital gains tax is lower than the higher tax rate on income tax. So, if you want to pay less in taxes, which can be a huge cost and eat into your profits, then you should consider being a long-term investor. If you found this video helpful and want more such informative content, then please support the channel by liking and subscribing.